Hello and welcome. In the next few minutes, we are going to demystify the 2026 U.S. federal income tax system. Now, I know it sounds super complicated, but my goal here is really simple: to show you the legal, straightforward ways you can keep more of your own money. So let's jump right in. First things first, let me ask you a direct question. Are you overpaying the IRS? And look, it's a fear a ton of people have, and for good reason. So many of us leave our hard-earned cash on the table just because the whole system seems way too confusing. Well, that's exactly what we're going to tackle today. This explainer is for anyone who's new to this, employees, freelancers, small business owners. We're going to cut right through the confusing jargon and give you some clear, simple strategies so you feel empowered to keep more of what you make. So where do we even begin? We start with the absolute basics. And I promise, this is the aha moment where it all starts to make sense. We're not doing any crazy math here. We're just going to understand the one core idea behind how your tax bill is actually figured out. Honestly, it boils down to just 3 steps. Step 1, you start with your gross income. That's every single dollar you earned. Then, and this is the important part, the government lets you subtract certain things. We call these deductions. What's left over is your taxable income. And here's the secret. Your one and only goal is to make that final number, your taxable income, as small as you legally can. And this is exactly why that matters so much. Your taxable income is the only part of your money the government actually gets to tax. It's not your full salary, it's what's left after all those deductions. This means every single dollar you can legally deduct is a dollar the IRS just can't touch. Simple as that. So how do we start shrinking that taxable income? Well, for most of us, the single biggest and easiest tool is something called the standard deduction. The best way to think about it is like a giant freebie discount that the IRS gives you right off the top, no questions asked. And for 2026, this tax break is seriously generous. Just look at these numbers. If you're single, you get to instantly chop $16,100 off your income. If you're head of household, that's usually a single person with kids, it jumps to over $24,000. And for married couples who file together, it's a whopping $32,200. Go ahead and find your status on this chart, because that number right there is your new best friend. Let's just pause on that number for a second. $32,200. I mean, think about what that actually means. A married couple gets to earn over $32,000 completely tax-free at the federal level before their tax bill even begins to calculate. That is a massive built-in head start. So here's the simple takeaway. For most people, especially if you're a younger worker or you're renting, this standard deduction is so huge that it's almost always a better deal than trying to meticulously add up a bunch of small individual expenses. It's your easiest and often your biggest win. Okay, but it gets even better for 2026, because on top of that huge standard deduction, there are 2 major new tax breaks that could help out millions of people, from employees to small business owners. Let's break them down. All right, let's put them side by side. On the one hand, we've got the brand new overtime deduction, and that's aimed squarely at employees. On the other hand, we've got the qualified business income, or QBI deduction, which is a massive win for freelancers, gig workers, and small business owners. 2 different groups, 2 powerful new tools. Okay, first up, the overtime deduction. If you're an employee who works legally required overtime, this is for you. You can now deduct up to $12,500 of that overtime pay if you're single, or double that, $25,000 if you're married. And here's the best part. You can take this in addition to the standard deduction, so it lowers your taxable income even more. It's basically a new reward for putting in those long hours. Now, for all the self-employed people out there, listen up. The QBI deduction is an absolute game changer, and the huge news is that it's now permanent. This lets you deduct up to 20%, a fifth, of your business profit straight from your income. And it's not just for big companies. This is perfect for your side hustle, that gig work you do, or your online shop. There's even a new $400 minimum deduction to make sure even the smallest hustles get a little bit of a break. Okay, so we've covered the core idea and the big new tax breaks. But knowing this stuff is great. Doing something with it is way better. So here's your super simple 3-step action plan to take control of your taxes starting right now. This is your entire checklist. Step 1, figure out your filing status and memorize that magic standard deduction number. Step 2, just make a quick list of all the ways you made money this year. And step 3, based on that list, just check, Do you qualify for the overtime deduction as an employee or the QBI deduction as a business owner? That's it. Just doing this puts you right in the driver's seat.
And this all comes back to a core idea, which I think this says perfectly. The goal isn't to become a tax expert, it's to know the rules of the game so you can play it well. You don't need to become a tax whiz overnight. You just need to know the basic rules so you can stop leaving your money on the table.
So I'll leave you with this question to chew on. Now that you know about your standard deduction and you know about these awesome new tax breaks, what's one thing you're going to do differently to take back control of your financial future? And of course, just a quick but important heads up, all of this is for educational purposes. It is not personalized tax advice. Everybody's situation is unique, so you should always consider talking with a licensed professional before making any big decisions. Thanks so much for tuning in.